years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to discuss the transformation we're about to see occur on April 2nd. I'm going to talk about some of the aspects that I see it and go into some of the economic implications. Let's get into tonight's video. Well, welcome everyone. I've got a lot to cover tonight. I apologize for last night's Substack. I got into talking about what I'm going to discuss even more in tonight's video, which is going to be navigating this transition that we're about to go through in the economy. I think there's going to be an amazing shift in how things are going to work, regulatory-wise, mechanical-wise, through taxes. Everything's going to change. But let me set up for how tonight's video is going to work. I'm going to go through this transition and discuss this. I actually have a PowerPoint to discuss. I wanted to be very guided on this presentation. And then when I'm done with that, I'll go through and we'll cover the markets. By that time, our database will be updated and I'll be able to go through some other aspects of market activity. So let's go ahead and let's get set up for this video I'm about to do. And I'll show you the second here. I'm just getting the PowerPoint ready to go here. Okay. So one of the things that I talked about in last night's Substack, I actually had to split it in half because Substack has a limitation on how much you can do on one publication. I'm probably going to be changing some things on Substack, but I started writing and I got deep into this subject here of the tariff environment. It's on everybody's mind. There's so much noise around this situation, positive, negative, all that. This is really, in my viewpoint, I want to go through this and unpack actually in between the lines of what I wrote in last night's Substack. And last night's Substack, when I started writing this, it got so long, I think I had 3,000 words in just this section alone. So I split it into two. Hopefully you saw that. There were two, so make sure you go and look at both of those yesterday. They got about equal views, the best I could tell. But let's talk about a couple of things here. Now we're coming in to the quarter's end. We got a couple more trading days to go. I think the actual last trading day is next Monday. But regardless of that, we're going to start to see some window dressing activities coming in where folks are trying to make a bet or let's say a change in the portfolio construction and how they're likely to position themselves for the balance of the year. It's not, and maybe even beyond. So this is a big shift that's going to happen, at least if you were in the boardrooms of a lot of the big mutual fund companies and other asset managers, you would be hearing this conversation over and over again. So I thought I would unpack at least from what I saw. And I've got probably a series of things that are going to happen because I think this is probably, I've been in the markets 45 years now. This is probably the most significant change that's going to happen going back to probably 1979, 80. And just the transition that we saw. I came into the markets and watched interest rates go to nearly 25%. And then during my career, I watched them go to zero, right? From 25 to zero, and now back to 4.5. And you would think it was like the end of the world if you listen to most of the folks around the environment. But we're going to get some activity around this quarter end, kind of reshuffling of the deck from the standpoint of what I think is going to happen on the from a portfolio standpoint. But what are the bets they're going to make? You know, are they going to try to play into people that are not going to get tariffed? I appreciate one of the members in the community of our Discord has a long-term history, and I will quote him on what he said, but that most of these tariffs will not be passed through. That is the fear-mongering, again, of the media, saying these are all going to be inflationary, it's going to be terrible, everything's going to go up. That's probably not what's going to happen. A lot of these tariffs are not easily passed through, and they're more of a corporate hit than anything else. So equity markets might not like this, okay? Not saying there's not a negative on where we're focused here on this channel is the activity of the markets. That's going to be some issues here, and those of you who've been around know that I've been talking about a possible negative quarter in Q3, maybe Q4. We may get a technical and get a recession coming out of this. I think this transition is going to be huge. These new reciprocal tariffs are going to start to be implemented next week, Wednesday to be exact, of next week. And you're not going to see any effects from any of that stuff at the moment. It's going to be 6+ months down the road. And, I think that it's going to take a minimum of 6 months for you to get any kind of concept or idea of what these impacts are going to be. Now, your guess or your attitude might end up to be the right one, but to see the material effects in the economy going into the actual numbers coming out of the economy. Remember, every time we're looking back every month on every economic report we get, we're looking in the rearview mirror. So it's going to take at least 3 months down the road to even see if there's any effects here. We're also going to see a whirlwind of activity around these reciprocal tariffs, because what's going to happen is once they go up, there's going to be almost immediate negotiation. Now, what you're being told, the fearmonger guys are going, there's going to be retaliation and there's going to be wars. Probably not. There's no advantage. The U.S. is the largest consumer on the planet, something like $20 trillion plus that we spend here, and we are the world consumer. So everybody's going to have to try to work together on this. So, and I believe that's the goal of things. So I've pretty much covered most of this screen. I've got quite a few screens, so I'm going to go through this as quick as I can. I may skip some screens, but the national debt, this is the big deal, folks. This is what's happening right now. This is what Doge is about. There's a really good podcast that was done with the All In podcast with Chalamet, and they had Kutnick in, and they had Howard Kutnick on. And I would tell you, if I would have gotten my desire back in the 80s, I would have worked for Cantor Fitzgerald. I would have moved to New York. I probably would not be here talking to you because I wanted to work with those guys really bad. I was trying to get them to sign up for my newsletter back in the time. I had an institutional newsletter, and I really wanted to be there. I even told my wife, I go, if I get in there, we're moving to Connecticut, okay? And he's one of the most impressive guys that I've ever had the opportunity to watch grow a company, and then go through everything that happened in 9/11 and all of that was pretty amazing. But I would have worked for him. And now that, but there's a All-In podcast with him. I would suggest you watch this, and I think you're going to find out some things there. I'm going to be talking about that, and also with Bassett, the Treasury Secretary. You have to realize these guys are market guys. If you look at the just a sideball, but this is everything that's going on here, like on the screen, is what we're seeing here right now. We have a cabinet of true market guys. Now, we've had guys like Rubin and lots of Goldman guys running around, but a lot of these guys were more administrators. But you got Bassett, who is a trader. He traded with some of the Soros but he's ran a big hedge fund, so he knows he understands markets. And I will bring out some things because he quoted me. I'm joking that he must have read my 2024 newsletter, the annual outlook, because I talked about what exactly is going on here and what this page is all about. The national debt, this is it, folks. This is the game. because if we don't fix this right now, if you try to go and keep doing what we've been doing over and over again for the next 2 or 3 years, this country's done. I mean, the whole world's going to collapse. And I saw Bassett say that what he was seeing is that he goes, I believe we're heading off a major financial crisis. And I believe they are attempting to head one off. Whether they achieve it or not, I don't know. Nobody knows. I'm not making that prediction, but I do understand that we have to do these things. So my formula in 2024 outlook was basically you need to cut government spending by about 10%, and you need to get GDP at a 3% plus. And if you do that for about 3 to 4 years, the deficits are gone. All of the GDP ratios completely invert to pretty much normal numbers very, very quickly. So here's the deal. We got $6 trillion spending. We got $4 trillion in revenues. We got to borrow $2 trillion. That's not going to work. They got to cut this thing back and hard and fast. The $2 trillion deficit that we're going to incur is going to, interest rates aren't going to be able to go down. I know people are talking about it's not going to go down only if the pattern, let's see what I have on the next screen. Yeah, so if you get $1 trillion in cuts and you can get the tariffs in place, which I think is on the next screen, you got Musk in there looking at all of the expenditures, trying to get rid of not just the crazy stuff that we hear, but every agency is bloated, and we've all known this forever. But this has to be fixed. So a couple things here on these screens, and I discussed these in the last night's Substack. But this is, like I said, in between the lines here. What I'm seeing here from the standpoint of what's going on is, let me go to the next page here. You got tariff revenue projected to grow from 50 million right now to 500 billion. And if you cut the expenses by $1 trillion, and you get things to start to turn around really quickly, and then you get deregulation and other things to reshoring to boost domestic growth. So you've got to just cut back everything and let it grow. Like this plant here on this page is perfect from that standpoint. So that is the basic plan. Then you got the gold card. I have mixed feelings about this. I'm not going to judge anything, but this is the plan that's going to affect on April 2nd. Like it or don't like it, doesn't matter. It's going into effect. And if you watch that video that I just mentioned with Howard on there, you'll see that this was basically his pattern, his program that he laid out to Trump. He goes, we'll cut $1 trillion, we'll create a new $1 trillion of revenue. So there's the $2 trillion deficit's gone. Balance the budget, and then he says anybody, I think it's on the next screen, anybody that makes 150,000 or less has no taxes at that point once we balance the budget. But this gold card thing, there's 100,000 applicants could generate $1 trillion. There's an estimate of 2 million people that could buy into this gold ticket kind of thing, the gold card. And that in itself, it's an incremental kind of revenue, so it's not ongoing, but it could continue to generate depending on what kind of gets in. The kind of people that are going to spend $5 million are probably going to come here, start companies, do other things, be good citizens. That's the theory of it. Doesn't mean that there couldn't be bad people financed to get in, but like I said, I have mixed feelings, but this will generate some money. So all of a sudden, we're looking at close to $2 trillion of pledges of everything that goes on. Let me just look and see where my next screen is. Yeah, this is kind of overlapping on here, but yeah, so this is what I was just talking about. Corporate tax cut from 21 to 15 will make the U.S. very competitive in the world. Also, you have this would be the lowest tax corporate revenues that you could have. So that would be really good. So let me just move on here. So let me come up just to summarize some of this stuff. But this is the plan that we're going to see implemented. Now, like I said, it's going to take 2, maybe 3 quarters before we see the effects. But one of the effects that I think we're going to see is a massive reconfiguration of the economies, which is going to most likely, even Trump has said it, is going to cause some pain. Now, there's some folks that are saying that, like soon as if the market starts to react negatively, that Trump and his love for the market, they're going to do something and they're going to panic and walk out. I don't think they're going to do this because there's a bigger game here in play, in my opinion. The game is saving the financial system. It's not just here in the U.S. It's systemic across the planet. We all know this. At some stage, yeah, I have in my old website with our VPN Partners website, our old institutional website, there's a annual report I did. I think it was 2017, might have been 18. But one of the things I talked about then is like, what is the number that we get to where the debt gets so big? And at the time, it was like maybe 17 trillion. It's doubled since then. But it was like, I'm saying, is it 20, 22, 25, 27? Well, here we are at 36, working on 38. So we finally have hit that point where it's caught the eye of everybody to the point where we better do something or we lose big time. And it's not going to be pretty if we had I think if they don't do something, and if they're not, let's say that whatever they do, if they're successful, it will be a wonderful period going forward. If they fail for whatever reason, whether it's through resistance, there seems to be people that don't want to cut spending from the government out there, and all this waste and everything. That seems to be a problem with some people, not with me. But let's say they fail, then the failure is catastrophic. And, in history books, 100, 200 years from now, would be talking about the Dark Ages, maybe, just because it would be so catastrophic. I know that sounds pretty dramatic, but it is something that is very, very big. So I'm just going to go ahead and talk. I'll stay on screen for a minute, go through a couple more of these screens that I have here. But basically, the strategy is going to be when the tariffs kick in, we're looking at Q2, Q3 is the initial transformation period. And then you're going to, as you get into Q4 and Q1 of 26, this is where you'll see the effects. Here's the thing I want to put out there is that all of the commitments to building factories, whether it's auto or infrastructure from the standpoint of electrical and all types of deals that you see go on, what that is doing is that is the backdrop. So the transition could be somewhat painful, but as we come into 26, 27, all of this construction theoretically will come in to backstop the transition, and that will be the beginning of the transition. And being a boomer, I've seen a different America than a lot of you younger folks have. And it's, I grew up in the 50s and the 60s, and it was very different. And then when I was finally out of high school and starting life of my own, it was in the 80s, and things were still very, mid 70s and 80s were very still affordable, and the availability to a lot of people to succeed was there, even though I can tell you a lot of the same rhetoric that's around the economy now was very similar, but different. It's definitely gotten to extremes. So that's where we are here now. So this is going to be a complete structural realignment. We're going to find out what is there. If they, one of my biggest concerns, do they break something? And unintended consequences, we'll call it. Does something just get broken? If it gets broken, maybe that's part of the strategy. Let's cut everything and break it, and then we'll re-put it together. I don't know. I don't know if it's an ugly transition, a perfectly smooth one. I don't know how this plays out, but I do know we're going to have to contend with that from a market standpoint. All right, so let me just see here. Yeah, so the final, let me summarize this, and I'll do the second half of this stream tonight. I will go through some markets. We'll go through and do some market coverage here in just a minute. But basically what I'm trying to tell you is the current situation is not sustainable. We've been saying that for multiple years, right? Everybody's been saying it. This is not a sustainable pattern. Well, we're here. And at least somebody is willing to step up and try to do something about it. Whether you like the plan, you don't like the plan, something has to change. And revenue, I always say money fixes everything. Everybody's, the old saying, money can't make you happy. Well, it can sure keep you stable. And if you don't have cash flow, you have problems, and because you're draining down your capital all the time. And the bottom line is, this is totally unsustainable. So I think what we'll see here is really just the transition will start to happen. We'll get to evaluate it. Will the markets be negative or positive? I still think we have a lot of work to do in these markets, and I'll go through the short-term analysis here shortly. But basically, the whole goal of the government is to take care of the elderly, the sick, and the vulnerable, right? That's what government should be doing. I saw something, I won't go into this. There's so much in this transition and so many things to talk about, but one of them is George W. tried to privatize the Social Security system. And if you were old enough to be around for that little argument, he was giving the Social Security to Wall Street. It was the worst thing possible. If it had been done, as it was even proposed then in general sense, nobody, elderly people would never even be talking about the Social Security system being broke. Yeah, just being invested in the markets and all that. And they're talking now about a sovereign wealth fund. What is a sovereign wealth fund for? To fix Social Security, to take care of just what I'm saying here. I'll show you the screen. Is to take care of the elderly and the sick. So you got to have leadership, clarity, and charisma. Like Trump, hate Trump. He's got all those things. This is a rare chance, in my opinion, for a transition. So let's get set up, and let me get set up for going into markets. So let's start talking about markets here. See what kind of comments you folks have coming out. Yeah, money can't buy you love. Actually, I will argue that money can buy love. I adopted a child from China, and I would say, I always used to say, you can't buy love. You can. It is for sale. Yeah, so just real quick, if you came in late, I'm going to say it again. I have a video I made earlier tonight, and on the ML WaveTech ML fact sheets I've been putting out, the machine learning fact sheets on how to set up trades. I'm coming along with this real good. So watch that video if you're using our indicators. You can go and I actually put out the basics of how I'm doing this, so you'll be able to go literally take the image that I put out every night in the Substack and put it into ChatGPT or Claude and be able to generate an entire trade strategy on multiple strategies. Now, I've already perfected a lot of prompts, but watch that video. Please comment on that video. I hate putting two videos out in the same day. We've never had any good success with that. We'll see how it goes. Like Right now, the viewership's down quite a bit, probably about 100 right now in a normal stream. But hopefully, lots of folks will watch this and see what's going on. So let me close out some stuff and get ready, and let's go into the markets. Okay. All right, so let's go to the market here. We've got I've got the S&P up, so we'll start there, and then towards the end of the thing. And matter of fact, you guys owe me. Last week I asked for 1,000 likes. I got 660, maybe 700, but we need 1,000. We need these algorithms to let people know I'm around again here. Yeah, my plan is still to keep doing Tuesdays. I think that is going to be what I'm going to be able to maintain. At least that's my hope. But let's take a look at this S&P chart here. And one of the things that if you go back when we were printing way at the lows, all of the algorithms were projecting this recovery. And if you go through my last, let's say, 6 or 7 Substacks, you see what I've been talking about is a move up to the originally to the 200 and the 21. Well, we got through that. We actually got the PPMs to cut through their first and second derivatives, so we've gotten above that resistance. And you can see the let me bring this on full screen here. You can see where the red dots are showing us that we're heading right to that 40-day moving average, and that's been the dialogue. That's where we're normally going to go. I want to just show you a couple elements here. Hang on, I'm looking for a tool. There it is. Let me just show you a couple elements here that I always talk about. I don't use trend lines at all. I use the moving averages, but look at this little wedge that's set up here off the 200. And then we've got this pattern that's set up here. The red dots are coming in right here. This is what they're projecting, where we're going to come up and hit that 40-day moving average. Now we're at an advantage because the PPMs that I use, that lots of you use, are showing us that there's still a maintenance of the angle of attack down, which means that trend line at the 40 is probably going to hold. We may be able to get a little above it, but we should then come back. Let me back up a couple things here. We ultimately, this is going to be the, bear with me, I'm just trying to get this tool to work. This right here is going to be so we probably get a move up and then we get a move back in here. Once we get over to this area over here, where I call them where the twist point, where all the moving averages come together, then that's going to be the point where we make bigger decisions. So the bigger decision may be just this, is that we may be setting up a move like this, where there's a right shoulder setting up, and then we start to get projections, and that type of pattern would project to an all-time new high. I've been talking, I don't think that's the case right now. I'll try to go into I'll go to a weekly chart just to get a little perspective here, because a lot of times if you just look at the daily charts, you end up with getting a very narrow view of what's likely to happen. So let's close this out. And this is what I'm talking about. Down here where my cursor is right now, this is the 40. The 40 is maintaining a negative profile, which means that's going to be a point where you look for a rejection and all that. I have run the the sheets here real quick. This right here is the fact sheet for tonight. This will be in tonight's newsletter. But this was done about 15, 18 minutes. And the video that I will post right after we finish this, probably within the hour, I will post the second video that will go through the trade setups and how to use this. It's about 25 minutes long. I just left it raw. I did it basically like a live stream. So, but there are targets and things that are coming out of here. But you can see that what the PPM1 is at a plus 0.41, which is a trend mode. And that's why we're continuing to see this angle of attack move up. So we're going to get wedged. The big wedge is going to be, let me draw this in, and then we'll move on to NASDAQ. But the big wedge is going to be right here. This is let me get rid of this tool. The big wedge is going to be this 10-period moving average coming up here, and then we're going to get the 40 coming here. So that's going to be where the markets are likely to stay within these parameters. We may come a little bit above it, but we should reject on. And what I was just talking about is actually setting up more of a maybe a 0.382, 0.5, 0.618 type retracement from this the bigger picture here, which would be this. And this is the same configuration I'm talking here that will apply to the NASDAQ. So the bigger config is this. Let me make this a little fatter so you can see it. But it's going to be this move up here and then a right shoulder to set up. And right here is where the money will be made, and the determination will be whether these will be enough time where we start to get the tariffs. You're going to get all the noise that I was talking about in my intro for today's video, and then we'll find out whether the market's going this way or whether maybe what I'm drawing in now, I think, is how it plays out. Maybe an attempt at an all-time high, but that's too far down the road. But as we come into April and get into literally get into Q2, that's when we're going to start to see some of these effects, and we're going to be able to talk about more of what the expectations are for the rest of the year. Yeah, we're doing great on time. We're 30 minutes in, so I should be able to get through everything. So let's go ahead and go to NASDAQ. I said these are same configuration here, where the red dots are projecting out. Now the NASDAQ has some live Fibonacci targets here. Let me just emphasize a bit on that from that standpoint. So we got three fibs here. We got 20,695, 21,280. We'll leave it at that. But let's draw in a couple of these things and talk about these patterns here. Those of you reading the Substack know that I was talking about probably in the last 5 to 6 days, and actually going back to quadruple witching on Friday, that the Mag 7 were going to come back into play. So the tech was looking like we're going to get back some leadership here. We're a long ways from being at an all-time new high, but these fib targets that are right here are interesting. We're probably looking at kind of an area. I'm just going to try to draw this in. This is probably going to be the region that the markets are going to move into. I'm pretty sure if I looked at the sheet, I think we had an 82% probability of a higher close. When I generated that sheet, it was 15 minutes after the opening. We've actually already rallied about 700 or 7 handles from there. But this pattern is what I've been talking about, should actually set up something like here, whether we end up within the confines of these moving averages. I know I got a lot of lines here, but the downward slope 40, the upward sloping 20, 21, and the 10 will come in here as well. And let me clean this up because I want you to, when I see these kind of patterns where you start to see all of the moving averages, I'm just start to crisscross. I'm just drawing them in so you can see them. When you start to get into that crisscross, that is a transition point of, we had the downtrend. Now we're trying to decide there's going to be resistance around these numbers. Like I said, my expectation would be some kind of retracement that come out of here. That would be what would be normal. But we may, if we stay sideways, sometimes there's an old saying that the market corrected while it went sideways. It never came down, but it just was grinding sideways. And we've seen this happen the way the markets, like today's action was one of those grinder days, right? But we're looking at the longer term patterns here. We're likely to, this will carry us, I'm going to draw a straight line up. This is around April 14th right here. We'll put that line straight up there. So we've got the better part of a couple weeks, 10 trading days plus, that we're going to see the markets probably come into that formation, and the decision point will be somewhere out there from that standpoint. Let's take a look at the algos, then we'll move on. There's something I do want to address at some stage here, is there's a general belief, you can remember when everybody was telling you, like the Tom Lees of the world, a guy that their fund group is like really mediocre at best, but for some reason they always toed him out when they need somebody bullish on something. They bring Tom Lee out, right? And it's funny, if you're bullish, you're Tom Lee's best friend, right? If you're bearish, you hate him. So anyway, it's just kind of funny. I've been watching his character for a lot of years. But what we're seeing here on the algos is a continuation into around that April 10th, April 14th level. It may change from there, but the bottom line is what we're seeing is we're coming into this sideways mesh of consolidation, and that's most likely what we're going to get. And any spikes, I'll do my best to cover where the ranges and the spikes are from that standpoint. One of the other things I'm working on is using those data sheets on a weekly chart so we can get a little bigger movement there that we can use, especially for spread trades on options and other things. But just keep hanging around, folks. Make sure you subscribe. Hit the like button. Need 1,000 of them. You guys owe me. I'm trying to make a comeback here. Yeah, I know, Bo. You're always. I see about the Russell. Okay, I'll bring it up. There's not much there. It's a piece of crap, and it's going to stay that way. There's no upside on the Russell. Yeah, I'm just looking at a couple of comments here. Yeah, so my big goal is, by the way, on these WaveTech ML fact sheets, are to have multi-level, even using monthly charts. And I'm trying to build an app right now. I've gotten a fair way. I've kind of hit a couple snags where you're going to be able to put your own data in. My real goal is just to have something that pulls the data right out of TradingView or data source. It won't even matter what it is, but you will need to have the indicators to be able to generate those sheets. But the bottom line is, all these algos, you can see the 10 here where I have my cursor, that's peaking out, but it's peaking out at very robust trend levels, okay? The PPM2 is continuing to grow, but this is the cautionary thing here, is down at the bottom here, I'll move my cursor to the next level here, is the 40 does not get the acceleration, which means that downward slope or that angle of attack or the resistance line is going to stay right where it's at there. So let's move on. The other thing is that the 200 is also declining, and the 200's in the mix. So what's happening is I'll show you the 200 is starting to flatten out and roll down, and if the 200 goes, so does the market. Then we get a whole nother leg down. At the moment, I think we're pretty much locked into sideways, probably down, setting up a right shoulder. We'll be able to set up from probabilities whether that level is going to hold or not. Yeah, yeah, I think Todd, it trades under NQ. Yeah, that is NQ. That's the 100. So let's go ahead and let's go. This is the Russell. Let me just fix the scaling. This is daily Russell. Let's go to weekly. Yeah, I get it. So this is a weekly Russell chart. And see, it's trying to put a bottom in here, but this is probably right about at this top is where Tom Lee was running his mouth at the highest level. We're going to double in price and all that. This has everything to do, folks, with the yield curve, and I keep talking about this over and over for 2 years, is that the Russell cannot get a good bid and a good sustainable rally. There is a ton of zombie companies in here. That yield curve has everything to do with how there's a lot of regional and smaller banks, community banks in that index as well. And with the current configuration on the yield curve, I'm not going to go very deep on this. There's no way for these stocks to do well on an index. Is there good stocks in the 2000? Absolutely. There are great stocks in there to pick. But as an index, it can't get out of its own way. So we are seeing some bottoming. Maybe the red dots are suggesting we're going to rally back into the moving averages. But if let me just put the NASDAQ up here so you can see that all of these kind of look this same way. NASDAQ's a little stronger. I'm going back to RTY on a weekly. So they're all trading underneath their weekly moving averages. So all we're doing from the standpoint, by the way, on all the indexes, whether we're talking the S&P, the NASDAQ, or the Russell, what we're doing is we're trying to rally back to the 10-week moving average. If you recall, the reason why I use 10, 21, 40 on a daily chart, the 40 and the 40-day moving average has very similar values to the 10-week moving average, and the 40-week moving average is similar to the 10-week or 10-month moving average. So they all stack together when you do what I call multi-series analysis, where you're doing daily, weekly, and monthly. Then you can start to compile these numbers and where the important numbers are. Because sometimes I've been quoted many times as that right now, and at the moment, the weekly charts probably are in charge. Those are where the bigger trends are, and that's where we're going to. It looks like we're rallying, and everybody thinks, oh, this is it, we're going to go. Then you look at the weekly or the monthly charts, and you see much different patterns. So the larger patterns tend to have more energy behind them because it brings in more of a consensus. Let's face it, what we're looking at being from a technical standpoint is that the consensus of traders, buys and sells and all the imbalances is where prices are, right? So if we're taking that concept forward, when we start to look at the weekly and the monthly trends, it manages to capture a bigger picture of that snapshot of that market sentiment. And that's, we look at the dailies, it looks one way. This is a weekly chart. You can start to see that the weeklies are starting, the 10-week moving average is on the Augos are suggesting we could get some reprieve, so we could get back above these values back into 2130, 2150. But then it stalls again as we get down the road. We get into early May, and like I said, there's also a lot of companies here that are going to potentially be affected by some of the tariffs and things of that sort. But most of them there's a fair amount of this index is financial. Yeah, so let's move on here. Let's go over to, let's use a weekly and look at the 10-year. I remember when we got this week over here, we got down to, I think, 411. Everybody's, oh, it's going to 370. No, it's not. The whole scenario around the interest rates is going to be probably low 4 is probably the bottom to around 440, and it's just going to waffle in there. We're actually seeing better real estate numbers than I thought we would see. Right now, it looked like we were going to get a further deterioration. We didn't get that. We're seeing some stabilization. From the standpoint of the moving averages, we are seeing going out, looking into the summer, that maybe we could see back to the 4%, maybe get below 4, maybe 390, but we're going to see a lot of resistance. And I've talked about this forever, is really just the flat yield curve. There's been, I mentioned that if you were watching for a little while here, I mentioned that All In with Chalmers and I forget the other guy's name right now. They did an interview with Scott Bressett, the Secretary of Treasury, and he was talking about how they changed the, not they, but Janet Yellen and that old band that we used to play, they changed the offerings of how they were configuring things, and it really kind of put some interesting little kinks into the Treasury system, and they're going back to kind of more of a traditional strategy on that. So, like I said, I'm going to be talking about, I think if you're really serious about understanding what this transitional phase that I've been talking about on this video tonight, what it's going to look like is it's going to have to be, you're going to have to understand the people that are running it. Although used to have a old guy on the trading floor used to say, do not pay attention to the man behind the curtain, referencing the Wizard of Oz with his little bars. Well, I'm telling you, pay attention to the man behind the curtain, because the man behind the curtain is the new Treasury and others in the administration that are pulling the levers and they're moving things around. So you do want to pay attention this time. And I think it'll be really impactful from that standpoint. I'm just looking at a couple comments here real quick. Yeah, I'm just saying, yeah, a couple things here, folks. I'm just saying a couple comments. I just want to diverge just for a second here. Yeah, I think I'm going to try to get back and active on the Discord again, and that's a private Discord. So if you bought the indicators, you're in that group, because I want some feedback on some of the things I'm working on, and folks with the indicators are going to be a big piece of that. And I think if you want to check the indicators out, that's kendallreport.com/indicators24, I think is the right link. Or you can go to the description below when I'm done, and I'll make sure that gets posted in there. Yeah, so I'm just looking. Yeah, thanks for that. Yeah, I actually was working on some of the lighting. I'm not at my studio. I have a really nice studio that the screens, when I go live, those are actually there. I've actually moved everything around because of some personal issues. I'm working out of a home office, so I don't have the nice studio I had before. I still have it. I'm just not using it currently. That may change, but we'll see how everything plays out. Yeah, and I see Brad saying something. Honest goal is trying to get to the external uh, uh, revenue service, which is the tariffs. And it's interesting that if we get the onshoring going, imagine what it would be like if the taxation situation where we balance the budget and there was no, if you make $150,000 or less, you have no taxes to pay. That's a big increase on everybody. That's like a 30% increase in spending plus. And the what's interesting about that number is 85% of the U.S. is in that window, roughly. And so that would be a huge thing for America to see. You know, I've been to Dubai and Singapore, and you go there, and all their infrastructure, their roads, everything's perfect. I realize they're small environments, right? But the way that money's used is much different, and for the use for public. The U.S. should have the best roads in the world, and I can guarantee you, if you drive down, you want to see what the infrastructure in the U.S. is like, drive down an interstate. You know, you'll find out all about everything you need to know. I'm right sandwiched between I-17 and I-40. I-40 is between the California line and Flagstaff and beyond, maybe all the way to Albuquerque, is it will rip your tires off trying to drive on that thing. Anyway, back to the markets. The Treasury, I don't see a big move coming either way. We've kind of peaked out a couple of times. There's been some hysteria around some of the things that are happening, but I think we're going to see, as these tariffs and we get maybe closer to the external revenue service, as we get closer to the potential of that you're going to see some of these stressors come off. Now, I need to comment on this. I probably should have done this earlier, but I'll do it right now. But the reality is that a lot of folks looked at the Fed backing off on QT was a loosening. It was dovish. I've been telling you for 2 years to watch when they back off on QT, not because that means they're getting more dovish and they want to be stimulative. It was about where the balance sheet on the Fed needs to be. And I've been arguing between 7 and 5 trillion. It looks like 6.5. They slowed it down, so probably 6.2 trillion. That's the number. If you remember, if we go back to 2020, when the Fed said, "Hey, we're going to be truly the lender of last resort. We're going to be the banking liquidity." Everybody, all the banks have their own liquidity set up that they have for operational purposes, but the Fed is there to back up the banking system. And I said, when they start to do that, you'll know the balance sheet is where it needs to be for them to maintain and whatever risk that they see out there. So that is, from my viewpoint, was not a dovish event. We saw the treasuries, initially move down in yield, like that was it. And they should have, because they're selling less of them. But then all of a sudden we saw yields move back up just a bit. But I think we're just status quo. I'm an ex-old bond trader from 1980 into the early 90s. So, the configuration that we're going to see is going to be just continuing from that standpoint. Okay, let's go. I don't normally cover gold. Let's see where we are. Yeah, we got about 6 minutes. We'll do gold and I'll cover Bitcoin. Listen, folks, get the Substack. It's kendallreport.substack.com. There'll be some stuff, links in the description when I get done with finishing this video, I'll put everything in the description. There's a link tree that you can get to all the products. And I'm working on a project for WaveTech using the AI. These new data sheets, all this stuff is becoming kind of moving forward and expanding into the future, so to speak. But gold continues this weekly chart again. Gold is starting to get a little frothy, but you can see the red dots are just flat. I think we just consolidate here around 3,000. I believe, yeah. Let me bring this up so you can see it. There are some big Fibonacci targets up here. They are 3,300, 3,600, and 3,800. You'll see these dots up above here. I think this is probably realistic. Is you can see the angle of attack here on the WTRs. These are the predictive moving averages. This is what the slope is being expected right now. Sometimes this will moderate depending on what happens in the front end of this, but we're looking at least an upward move here. I don't think we get to this number anytime soon. If we get to it, it's probably going to be Q3 or 4. Maybe that will be coming into the focus of the potential recession that we have. But gold's probably stable here. Don't see any big downside. Even when we start to look at the PPMs, they're all starting to peak out in peak momentum, but they are still likely to maintain positive momentum nonetheless. So we're not looking at anything that's going to be big disruptive here. If you're holding gold, you're good to hold it. If you're trading it, then probably use the market grid if you have the shorter term stuff. But we'll leave it at that. So I'll touch on Bitcoin. I'm going to go to the daily chart here. And this has been an interesting pattern to watch. Those of you reading the Substack, when we get down here to a pretty critical level around 74,000. There was a Fibonacci target that came in over here. Let me just see if I can get that value. It was 74,235. We printed low here, 76,600. We bounced off of there, but the scenario was that we would come back into this wedge between the 200 and this downward slope 40, and that has been the perfect call. We even got Fibonacci numbers to come in that were suggesting that same type of configuration there. So, but you can see the algos here, they're starting to flatten out. We're probably, I'll go back to a weekly chart here. You can see even the weekly chart is showing the algos are staying negative. And this is a big number. We're negative 1.4 on the PPM1. PPM2 is still positive, but it's rolling over. You can see the rollover here. Let me just bring this up. Yeah, you can see how everything's starting to roll over. This is the inverse of what I was talking about a few minutes ago, is that we get that crossovers of the moving average when you're in a bottoming phase. That's typical of where the resistance is going to be. This is the support levels, and you can see clearly we're probably going to get wedged. This is a weekly graph here between the upward shape 40 and the downward 10, and possibility moving up to this in this pattern. Let me draw it in because this is like one of the key patterns that I have recognized over the years as far as what's going on. So here's first resistance here on the 10. We get into this little wedge where I've just drawn here, and then if we look at the 21, it's rolling over. So this would be we'll call it wedge number 2, where it extends out. So the market would trade in here and then ultimately over here. So the decision point, that was a terrible draw. The decision point is right here as we come into the as we look out to the future. So we're here. This is the timing point where we're likely to see some decision. Most likely, we're going to stay within the confines of where those are. Okay, folks, that's going to be it. Right at 1 hour. Good job on my part. We got through a lot of information. Please make sure you subscribe, like, and share these videos. The like buttons, I need 1,000. Give me 1,000 if you're still hanging out. Just click it before you leave. Just looking at a couple comments before I go. Yeah, so Tuesdays, just to summarize here, Tuesday's going to be the day I'm going to be live here. I do have a video on top of this live. There's another video that's coming out. It's really an overview. It was like a live stream. I just turned on to record and recorded. But that second stream, if you have the indicators, then make sure you watch that, because it's going to be some thoughts on how to use the data sheet that I put out overnight to develop trades for a lot of different things. I am also writing an article in Substack that will be available to anybody, whether you're a free or paying subscriber. Paying subscribers pay $8 a month, or I think it's $6.67. If you pay for a year, it's $80 for a year. But anybody that subscribes that letter will get this. What I'm doing is I'm putting out a full understanding of what these sheets are. I will talk about the probabilities that were developed, how they were developed, all the aspects from a technical standpoint. And then there will be a description of how to use prompts with even ChatGPT or Claude to come up with trade setups. And ultimately, that's still being developed. I just started doing that a few nights ago, and it's been keeping me up late at night. I actually got to bed at 7 a.m. Eastern time last night, so it was a very, very long night. But once again, I appreciate yeah, somebody's asking, let's see here, can you please say more about the app you are working on? And yeah, what is the date can users enter? Yeah, I'm working on a couple of things here. So let's just talk about that for a moment. Let me see if I can bring up something here real quick on the other screen. Bear with me a second, and we'll just extend for a few minutes. We'll do a couple questions here. I'm just trying to see if I can bring up something. If it will come up, I will show you. Yeah, when that. Yeah, so the plan is hang on, I'm trying to get something to work off the fly, and it's not working. So I'll just tell you a little bit about it. So the plan is that I'm building an app with a data window that you'll be able to cut and paste any data from any symbol into a data box. For right now, it's going to be somewhat of a manual input, and that's how it'll probably be released. That will automatically produce the sheet that I show you folks all the time. So the plan is that it will produce this report, this black window here, my plan is to add in a trading strategy of your source. So there'll be a drop down window. Say I want a day trade strategy, I want a DTE, I want a spreads chart on whatever, on option spread chart. And then that there'll be a message printed in here showing you details. But for right now, this is what this video tonight will show you, is a couple ideas on how you can take this sheet and copy it and paste it into Chat GPT and get some screens to come up. Yeah, so that's a good question there, Moon Bear. I developed a couple things, and I'm considering this, where you can take a screenshot of a data screenshot. I don't know if you had like drawings from a customer, but you might be able to do it. Watch the video that's coming out, okay? Comment, and I'll just put this out here again. Anybody, I've already connected with multiple people throughout the system that have like really serious skills in programming. But even if you don't have that, if you're a good trader, you've been using indicators, you got ideas and things, I'm going to set up a separate email. I'm working on that right now, that you'll be able to send me stuff. But for right now, you can put it into info@kindlereport.com, and that will get you at least some concepts of, you can tell me what some of the things you're thinking about, what you're interested in. But I will get some sort of email set up for that. But the plan is that this app will generate this sheet, and it will generate trade ideas. There'll be a couple plans. It's going to be a freemium where you get like 5 reports, I think something for a month. What I'm working on right now is it does work with an API on Claude. So you may have to get a free Claude, and you'll develop, you can just click and make your own API, and then you drop your API in there, and then you'll have access to that. So you can generate the reports beyond 5. They have to be limited because you start getting thousands of people clicking on an API. It can get pretty expensive for a free type app. So we're going to limit it to a few. If you want it, you put your own, you can pay for the platform. It's not going to be much. It's going to be minimal dollars. And that's going to be actually the launching pad for a larger project that I have working, because I'm going to take all of my old legacy technology, ultimately move it into a new wrapper and a multi-level service that you can be able to use. But when is that going to be out? I don't know, to be honest with you. I was hoping to be able to show you something on this other screen, but it wouldn't come up for me. So anyway, that's a couple of things there. So by data, what that means, I will show you what that means. The data window over here on TradingView, let me get to a data window here. So when you fill this out, this data window on the far side, you just literally highlight. I'm on a Mac, so Alt-C, and then what you can do is you will paste that information. So you have to have all the indicators that I believe there's 10 of them: the 4 ppms, the WTARs, the fib target, and the market grid. So you have to have all of those indicators on the screen. That's what I developed around, because those are the primary indicators that I show you whenever I'm doing live streams, or anything I do are the ones that I continue to do. So the plan is to get an email, early sign up for a beta group, and to get access to this product. I don't know until we get a little bit further down the line what it's going to take, what kind of limitations and how many hits we're going to take until we get it scalable. And initially there'll be probably different groups that will come in as well. But anyway, Um, yeah. Yeah. So best thing to do, Moon Bear, is send a info at Kendall Report. Put those screenshots there. Um, yeah. If you have a few more indicators, no. This all. If you put more information in there, it's probably gonna. I don't know if I'll have to parse it out. So just the indicators that I developed it on for now. Uh, where you can use, yeah, this data sheet's been, I've got about 2.5, 3 months into the data sheet. So I put a lot of work into the things that are critical. It does an amazing job. You'll see. Yeah, I see. Oh, Bo was explaining to somebody how to do the red dots. Yeah. Yeah, no, that's fine. But I get that. You can use, but it was programmed just for these. This is the data that it takes in. That's how it was developed. So I didn't put any of the other stuff in. It's already very complex because there's a lot of probability calcs, and I think once you start to see the trades that are going to develop out of this sheet, is going to be good. We're going to do a whole live stream on this, but watch that video I put out tonight so you'll get a little more insight. I'm going to do another video on the WaveTech ML, which is machine learning fact sheets. I'm going to do another one that breaks down everything in there, what's being calculated, the probabilities, how things are developed, full transparency on that. And then you'll have a little better understanding on the sheet itself, how it's being developed, and then there'll be more videos on how to use them for trade setups. A couple of things that I did, you'll see in that video. It was interesting because you can have you can be in chat or Claude, and you could say, okay, that's a great trade setup, but I want you to focus on just this. I want you to develop that further, and what it comes up with is amazing with the data out of that sheet. You can have a serious conversation and fine tune your strategies, including putting some. You may be able to put some information in there, and when you're building the trades, to consider. Speaking to Green Garden Capital, you can put in more information. I don't know what's going to happen. Say, hey, I have these indicators. You can put that data in there. Can you use that too to develop a trade? Why not? That's the beauty of the AI and all of that. But the sheets themselves were developed with the ones I have in there. So got into about a 12-minute rant there. Okay, yeah, I want to see it, Moon Bear. Let's do it. Um, there's lots of good ideas. What you guys see on this channel is what I have been doing, the things that I've been doing for a very long time. All of these indicators, the PPMs were first thought of and research started in 1984. So we're talking about 4 decades of me using this stuff. And if something works, it's not broken, keep using it. I keep waiting for all these years for our models and other things to not work anymore. I kind of look at guys like Jim Simons and people like that. They went down some really weird trails, and Simons only survived because he had people that were willing to give him more money to burn before he figured it out, and definitely figured out some things, but there were a lot of issues. I was telling somebody the other day I probably made one of the biggest mistakes in my career on what I did with some of the technology. I should have just set up a fund group. That's what I should have done. But I took the path I did, but this is stuff that's legacy stuff that's been used and tested in the trenches for decades and decades. And, I'm too old to switch off. And there's I'm sure some very good ideas out there on what people are doing. So coming back up. This is definitely it. Close number 2. Thank you so much. Hit the like button, subscribe, share the videos, watch this other video. Should be up in the next hour or so, the next hour to 2. We'll see how it goes. It's dinner time right now. Anyway, folks, have a great rest of your evening, and we'll see you next Tuesday.